All right, a little quick morning update. It's about 8:45 if you're on the West Coast. Um, oh God, 5:45 if you're still in Hawaii. But anyways, um, real quick update. What's going on today? Good news. Here's the ES. I'll zoom in a little bit here. Good news is for Tom and Tony that this went back down. If you're a contrarian, vol spiked a little higher. We're above 25 as you can see here. OBV or on balance volume or more sellers and buyers today a little bit. That's why it's pointing down, but it's still green, meaning uh it's still above its average here. Slow stochastic DS is still above 80, so it's at 84. So but at least it's still red, which is good news. If you were looking for a vol pop. Hopefully this rises. We'll see. I haven't pulled the trigger yet. The reason why is I'd rather just wait. If you have if you have more cap now, if you have more capital, you could definitely start selling some premium here as far as selling golden geckos, or if you have a directional bias or whatever. Um, I already had I already had positions. My PBR dropped. Went from 100 down to 95. So if you have more capital and you don't have positions on already, go for it. Put some on. You can put on any ETF that has an IB rank of 35%. And I have a scan list here that will do this. And you know what? I'll share my scan list in this YouTube video on how to set up the scan, or actually just you can just copy and paste. What I'll do is I'll just share the scan with everybody. I have two scans um, that I put on here. It's not really a watch list actually. I actually have the scan just on here. If I go to personal, see I have a high IB ETF scan and a high IB rank scan. These green dots are scans, not really watch lists, so they'll change depending on what happens during the day. The high IB ETF scan is for any ETF with IB rank of 35 or greater. High IB rank is anything with 50 or greater. All right. Excuse me. So I have these two scans here. Um, PBR was as high as 100. It dropped to I saw like 94 today. I think it was. So my PBR position is doing good because I'm short the 18 call. It was down to 16 something. It's down 3 points from percent today. That's good for my position. But I have pretty much all these on that do not have earnings. You can tell if they have earnings if you see like these symbols. Usually that means something's up with them. Like this is a dividend, I believe. And if you hover your mouse over it, it'll tell you. It should tell you. And if not, I don't know. You can click on it maybe. Oh yeah, I see there's a dividend right there in CME. But anyway, in PBR, they have some kind of announcement coming up. I'll click on it. Let's see what it says. Um, maybe it's just a news article. Um, but let's see. Oracle, you see a little light bulb and the telephone thing. That usually means earnings. If you click on that, it'll show you It'll say earnings or something. Yeah, see, earnings are coming up right there. So anyway, you know what? I should expand this a little bit so I can see There we go. But anyway, so you can trade these. Remember, all you want to do is you want to collect at least on a stock IB rank of 50 or more. You want to try to click at least 19.8% of the expected move based on the date's expiration that you're trading. ETFs, as long as IB rank is 35% or greater, and you can collect again 19.8% of the expected move, you're good. You have about an 84% chance. I think the study the P&L was great, and you had an over 84% chance of success doing a one standard deviation strangle on these, or a golden gecko. So you can zoom in here if you don't have a scan. If you just look at my daily watch list, you can actually tell what's over here, but I'll share those scans with you, and I'll paste it under the description for this particular video. Okay, it'll be on my YouTube channel, and of course on the forum. Um, Today was a great day, as they did a talk in the morning on a market measure on does the technicals of, like, for example, the relative strength help, and it showed it didn't, because it was you can look at the episode, but that's why, like I said, I don't use these. I use these technical just as a guide, meaning if I want to skew it, but I have no idea of what direction it'll go. That's why I love the golden geckos. I can be wrong and still make money, and that's what I love about these. I can be wrong and still make money. Not too many things you can say that would be the case. So anyway, I'm sorry, that's Oracle. That is IB rank of 56. So there's a bunch of stuff above 50 that do not have earnings. Okay, Yahoo's in play because of Alibaba. I think that announces next week Thursday. Um, EWZ, I believe, is Brazil. Vel is there's a bunch of these. So you just gotta make sure you do your plays right. Um, ETFs are a lot safer because they don't have dividends or they don't move as fast, so they're usually a lot better. I have profits in all of these already that I'm taking off. But let's look at FXE, and I'll go into why liquidity is so important. In fact, let's go to Doe real quick. Let's go to FXE. We'll go to trade. Um, People go, what do you mean by liquidity? Well, if you see teardrops in Doe on a trade, that means it's not liquid, and usually that means the bid ask is too wide. Let me show you why that's important. I didn't really understand this too, and so maybe I take it for granted. I want to make sure that you folks understand. See, I have a position in FXE already, but let me show you. You know what? I'll just do a golden gecko and see if I can find something that's in here that maybe I can find a strike that's illiquid. Okay, see these teardrops right here on the outside? I mean, I wouldn't be doing them way out there. I'd bring them in, but this is a good example. See how there's a teardrop? If you hover it, the bid expert, there is no bid expert, which is probably why it's illiquid. But if I bring it in, what if I bring it in a little bit? That's why it's all like that, because you can't trade anything. Well, okay, let me show you what I mean by the bid-ask spread, though. Okay, whenever you're selling something, oh, let's use Priceline. PC, I heard it's an expensive stock and it's illiquid. They were talking about it today on a Conference in Live, and then it was saying, there was a question asked about liquidity. So let's look at Priceline, and I'll show you an example. I'll choose a strategy, go to Golden Gecko, go to this, and let's go further out like this. Let's see if it's liquid. Let's find something that's all right. Here. See how this would be considered illiquid as far as the bid and ask spread is too wide. Here's what I mean. Let's just take a look at this put. See, if you're gonna sell the 1035 put, you're betting that Priceline will stay above $1,035 at the end of 70 days. Okay. Now here's why it can be kind of tricky when you do liquidity. Whenever you sell something, you're selling the bid price. Whenever you buy something, you have to buy it back at the ask price. Okay? So again, when you're selling something, you're selling the bid. To buy it back, you're selling the ask. So if you're selling this particular strike, you're going to collect $11.70. Okay? But if you want to buy it right back, you got to pay $12.40. You see what I mean? So that difference is the spread between the bid and ask. It's too wide. Meaning, for you to make any money, the bid has to, if you sell the bid at 11.70, it has to drop the difference between here and here for you to make any money, to break even. Okay, that's why you see what I mean? So that's why the closer the bid ask spread, the better, and why they don't like trading such high liquidity volume. So it has to drop, like, what is that, like 12.40 minus 11.70? It has to drop like almost 70 cents before the bid has to drop 70 cents before you can buy it back to make any money, because the ask is so high. Now, if you buy something, okay, if you buy something at 12.40 and you want to sell it, if you buy the ask at 12.40, right? And if you want to sell it right back, you're not going to make any money, right? Because if you're buying something for $12.40 and then you have to sell it for $11, you're not making any money. So the reverse is true. Okay. Now take a look at the SPY in contrast. Look how, hold on, real quickly. We'll just do this. Come on, load. I got so much stuff going on in my bandwidth. I got Tasty Trade playing live on 3 different things on my Wi-Fi here. So Okay, I'll just go like this, and then here, look at the difference. See the difference between the bid-ask spread? It's like 2 cents. Look over here, 1 penny. So if you sell something at 14 cents and you have to buy it back, you don't really have to, you know what I mean? There's no large gap for you to worry about. Okay, same thing. If you buy something at 15 cents, right? You want to sell it for a high price, there's not a large gap for you to overcome. That's what they mean by liquidity in the bid-ask spread. Okay? So usually when you see a teardrop on one of these, it means the bid-ask spread is too wide. And that's why the advantages work against you. Okay? And if on toss, you can see that right here. If you go to your trade page right here, all you got to do is you're looking for trades where the bid ask is narrow. See 98 to 102, that's a lot better than, it's a lot closer. It's 2 cents. See between 60 and 62, it's 2 cents. 34 and 36, 2 cents. That's what they mean by a liquid market, okay, where the bid ask spread is nice and tight. Go back to price line, look at price line. Look at the difference. We're not talking pennies anymore. Look, we're talking dollars. 30.70 to 31.30, 26.10 to 20. That's a 50-cent wide spread. 9.10. You see, it's 50 cents wide. It's a lot harder to make any money. Okay, when you're trading wide bid and ask spreads. Same thing on the call side. 17.80. Look, I mean, it's crazy. But that's the shot. That's the chance you take if you're selling bid wide, large or non-illiquid products, or meaning wide bid and ask spreads. Okay, so I hope that helps explain some of that. So whenever you're looking for something, you want to make it liquid. Okay, that's why when I do a scan, I'm looking for penny increment options, meaning I want the options to be tight penny increments. I don't want it to be like wide. I mean, and I don't want the strikes to be like 100, or like that's another one. I want the strikes to be close. See how the strikes are wider on here? Like, look, it's $5 wide, right? 65 to 70, 70 to 75. Okay, they're $5 wide. Look at the SPY. You want stuff tight like this, like $1 wide. Okay, so look, 10, 11, 12, right? You want the strikes, tighter. Of course, as you get further, now these are way out of the money, see? But like if you go to something like at 84%, which is one standard deviation out of the money, let's look right around here. See, at least they're dollar wide, 188, 189. You want to stay away from stuff that gets too wide, like we saw over here. You want to stay away from $5 wide strikes. It just makes it harder, okay, to get out of your trade. So that's pretty much it for today. There's really not much going on today. Here's the SPY again. As you can see, it's getting narrow. IV rank is at 25, which is good, and OBV is red on the SPY, which bodes good for the bears. On the ES, let's look real quick before I sign off real quick, and I'll let you guys know what else is going on later. ES. I need to put a T1 line in my house or something. Sorry, a lot of times I'm mobile as well, so you're seeing this on a. Okay, good. IV rank is high. Higher is creeping up. This is still red. It's still green over here, but at least it's pointing down. So what I'm looking for, honestly, on the ES, I'm looking to see if it'll bounce off this and go higher. If this bounces and goes higher, vol will collapse, and it'll be not good for. We might not see this. Okay, I hope that helps. Again, I'll post the scan. I'll share the scans as well on this YouTube clip, or it'll be in the comment section, and I'll put it on the post as well. All right, thanks a lot.